Hi, and welcome to this morning's early concise highlight. It is currently 7 a.m. U.S. Central Time on Wednesday, February 24th, 2016. And we have to say that the data is still weak, and maybe the most telling part of that, of course, has been the degree to which the energy price is reverting to weakness on the lack of progress on any production cap due to Iranian resistance has meant that there is no continued strength in the energy market. As of this morning, West Texas Intermediate crude at NYMEX, an electronic overnight trade, is back down around 31 bucks. Probably be very important to see if it holds or sinks back below 30 bucks. So we have to ask, what has all this meant to the markets? And quite simply, on the back of that oil weakness that kept the pressure on the S&P 500 yesterday after slipping back from above the 1925 to 32 resistance it gapped above on Monday, it got back around and tried to hold the negated down break from last Thursday that it stayed on Thursday, even dipped off to the 1902 to 1895 support range on Friday, and on Monday it gapping above this and above the slightly higher resistance looked like a pretty strong sign. But after holding around that area for most of the session, by late session the market was back under pressure, back below the early low at 1919, and therefore ready to break further. And this left a stale tone. Well, that was fulfilled this morning on the market currently being down at 1899 with a low of 1897. Now, this is important for several reasons. One is if the market holds up against the top of the gap that was left after the pullback Friday, going back to the gap when the market gapped higher last week Wednesday, on left a low of 1904, it filled into that 1902 to 1895 area, and if it can hold on around the bottom of this gap at 1898 and a half or so, that will probably mean it can recover and at least test higher resistances like the now reinstated 1922 or the pre-existing 1925 to 32. However, if it breaks below that by too much, if you start to seeing it back below 1890 or so, it's closed off completely the gap from last Wednesday. And even though we have this minor upbreak out of the short-term channel at 1886 area, chances are better if it's back below 1890, completely closing off this gap back to the pre-Wednesday activity, then it could be headed down for a retest of the 1860 to 65 area, which is a much more prominent longer-term level and a more prominent gap higher from when the market came in on the week on Tuesday after the President's Day holiday on Monday the 15th. So those are your lower supports and higher resistances. Right now, with the market this much lower, it will also be important to hold the actual price support because it will probably be at least modestly out below the lower runaway band on the hourly and on the 30-minute MACD indications. And that pretty much does it for the short-term view of the S&P 500.